edition of the Money Conversation, where we have been talking about investment for beginners, right? Today we're going to be looking at the different asset classes that you can start up with investing as a beginner. My name is Theodora Otsu, the money woman, the financial lord, and the Odogures of money. I hope you have listened to the first, second, and third editions where I talked about what investment is and what investment is not. I also talked about the tips that you need to look out for as a beginner so you know the companies that are viable to invest in. And thirdly, we talked about my advice as an investment consultant to new investment beginners, right? So today we're going to be looking at, as a beginner, what asset classes should you be looking to invest in. And the first on the list is index funds and ETFs. These index funds and ETF diversify portfolios and track specific market indices. As example, the S&P 500, which stands for Standard and Poor's 500, is a US based company, right, that tracks the indices of 500 top leading company, and their stocks are the top 500 stocks in the top leading company in the US. I don't know how to put it, but these 500 companies they have the top leading stocks. Their stocks are doing best in the US. So they collect these companies and they put them together, and then they sell shares to you as S&P 500. So when you buy that S&P 500, you are buying from all the 500 companies, meaning that your risk is minimal, because even if the first 100 companies don't do so well, you balance up with the remaining 400 companies. So when you buy stocks from S&P 500, you're not buying stock from an individual company, you're buying stock from 500 different companies in the US, and this really minimizes the risk of losing your capital. Right now, the second place is stocks. Investing in stocks, when you buy stocks from established companies, it's like you're having a share of their equity, which offers potential for long-term growth. So there are stocks that are really doing well this year, 2025. We saw a very good increase in Zenith Bank and some other banks. So when you buy stocks from these companies, you are becoming a part of their shareholders, and then you have equity in that company, and it offers long-term growth, because as long as these companies are doing well, your investment keeps growing. The third is bonds, and bonds have to do with federal governments, where the government or corporate debt securities are providing regular income, so they need people to buy bonds. And one thing about bonds is anything that belongs to the government of any nation and you invest in it, it's as little as having no risk, as in the risk is minus 0.0000 point, because when you buy bonds from the federal government of Nigeria, for example, your investment is safe. It's 99.9% safe. And why is that? Because it is the government of the country that you invested in. So as long as Nigeria is in existence, your money is secured. So think about the federal government savings and bonds and every other bonds, treasury bills, and all that always comes out. The next is real estate investment and trust. That is REITs, right? It's a diversified real estate portfolio generating rental income. So you invest in REITs, you begin to get rental income even if you don't have a property on rent. By investing in REITs, you automatically begin to enjoy real estate portfolio. And that. The next is the money market funds. In the money market funds, you experience low risk investments, providing liquidity, because you're also investing in different money markets. You're not just investing in one company. So as a beginner, these asset classes offer a relatively, and when I say relatively, I'm saying a relatively starting point for every beginner. It's essential for you to understand your risk tolerance. You also need to understand your financial goals. Like I said in the previous edition, set clear financial goals. Diversify your portfolio. Don't just pack everything and put in one place, and start with small investment and gradually increase them. So the last advice I will give to you is consider consulting people like me. Consider consulting a financial advisor for personalized guidance. You can never go wrong with an investment consultant guiding you on your investment journey. I remain your favorite money woman, and I'm looking forward to you hitting me up to guide you on this journey so that we can make many money miracles together. Until I see you again next time, when I'll be talking to us about why you should use financial consultants, investment advisors, or wealth managers to build your portfolio as against doing it yourself. Remain glued to this channel and keep learning and learning tips that will help you build wealth